When I first met Bill Woodward, who is the host of our next panel, showing up at his office, I really thought I was walking onto a Hollywood set because Bill Woodward has an incredibly powerful character, and you just know he's in the room. He's been a successful entrepreneur, a successful capital investor, and he's founded multiple businesses and has had over $3 billion in exits, including names we know like Macromedia, Launch Media, MySpace, Pulse. He's also been a lead investor in things like Demand Media, Android, Spin Media, Beachmint, Blurb. And his personal interests include spending time with his children, tennis, wine, movies, travel, and the entrepreneurial process. Now that reads like a personals ad, so feel free to reach out to Bill because he really is quite a character. And I'm going to invite Bill Woodward to the stage of Vator to bring up his panel. Come on up, Bill.
So we're going to try and mix it up for you. I assume everybody here is in our world, our ecosystem, and raising money, trying to raise money, trying to figure out what you're going to do next in that regard. And we're just going to, because it's a limited amount of time, I think it's 20 minutes, we're just going to get into it pretty quick. This is a great panel. I mean, the wealth of experience is phenomenal. It goes all the way across the gamut of seed investing all the way through to IPOs. It's strong. These guys have a lot of experience, and they've seen a lot of experience. So I think what we should do is just kind of, if we get all the mics going, we just start with questions and get everybody moving on a dialogue, and then leave a little time for you guys to ask questions. And I think we'll have one other person. Dana is late, and she'll join in just a minute. If not, well, I'll get Scott Painter to come up here and add a little bit to the equation. So we're going to talk about the LA or the Southern California ecosystem. So I'm going to first ask these three gentlemen what they think is hot in Southern California. And I'm going to start with Paige Craig here. What do you think are the hot areas of technology and companies in this region? And what would you do?
I have just my own opinion. I like labor disruption. I'm excited by companies that are out there empowering blue-collar, white-collar workers and creating value for consumers. So companies, obviously like Lyft, Uber, Washio, TaskRabbit of the world, that excites me right now. That's a big focus. And
is that your number one area?
It's a big area. And then old school industries, ag, I did a big round in towing. I like old industries adopting technology.
How about you, Eric? Eric and Eric. How about Eric?
Exactly. I mean, one of the areas we really like is sort of similar to what Paige said, is offline industries that are moving online that haven't really seen a lot of disruption or encroachment from software. One of the things that's nice about LA versus the Bay Area, for example, is that LA is just a really big economy, and there's a lot of stuff here that hasn't been tech focused from the beginning. And now, as every industry is getting more software enabled, there are a lot of interesting opportunities there, and that's one area we focus on as well. Another area we really like is marketplace businesses, partially because my partner and I spent a bunch of time at eBay and then have invested in a bunch of marketplaces, but based on some of the dynamics, and we've seen a lot of interesting marketplace development in LA as well, and have invested in a bunch of companies in LA that are pursuing marketplace models.
So a lot of, very similar to these two gentlemen, a lot of business automation tools, from software assessments for quick service restaurant employees, that type of stuff. So big fan of anything that's business automation. What I'm really excited about is, I'm not sure if it's a good investment, but I think it's a great consumer product at some point, would be sort of the video immersion on the virtual reality side of things. But just sort of just playing around that space, sniffing around, but software services, mobile services are stuff that we're constantly looking for.
Okay, well, let's kind of get into it a little bit on what these guys who have made probably 150 bets between them and put their money to work. What do you guys look for in an entrepreneur? And I'll start with Erik Rannala.
Yeah, I mean, one of the things that we look for often is domain expertise. And that doesn't necessarily mean that they've been an entrepreneur before or started a company, and it may not even be domain expertise in the way that people think about it, in terms of it has to be in that exact industry. But one of the examples of this that I always give is with Box, with Aaron Levy. He started a bunch of companies. He started Box while he was in college, but while he was in high school and in college, he and a bunch of buddies had started a lot of businesses actually that were small, but they had taken things from kind of a concept to launching them in the market, followed through, got customers, got revenue, did all the steps, or went through all the steps that it took to build a business like that, and sort of, in that case, by themselves, learned those skills and built those skills that they need to execute on that stuff. And that, that to me is still domain expertise. He learned all that while he was in high school and in college, doing it not in a big company or even a professional organization, but he built those businesses, figured out all those skills, mostly on his own. Some people figure those out in other companies, but we look for people to have the skills that it actually takes to launch a business. Another thing that we, this is harder sometimes to gauge, but commitment is another thing that we look for. And people talk about that in a lot of different ways, either like grit or determination or whatever, but however you want to phrase it, commitment is super important, because the reality is it's just really hard to start a company. Everything takes longer than you think it's going to take. It's a lot harder than you think it's going to be. And people really have to be committed. And that takes different forms, but that's one of the things that we tend to look for, is just people who have, who've indicated somehow that they are really committed to.
Sort of one of those intangibles, right?
It really is. Yeah. That one is sort of an intangible. It's hard to detect, but there are, I think, signals for it.
How about you, Paige? What do you think on entrepreneurs?
Yeah, so I've been investing for going on my 6th year now. I have a process. I have 5 specific questions I ask myself for every deal. And the first one involves, would I start a company with this founder? And there's a lot of things. I mean, a lot of gut decisions there, hundreds of things I'm probably thinking about. But what it really comes down to, in addition to the grit and the passion, is I look for people who do versus think. And so all this stuff, grit, passion, execution, just look at what people do. And you drill into because I'm quite often investing before there's sales and products and shit like that. So you have to really look at a founder. So I really look at what they do versus what they say and what they show me.
So I'll answer that differently. So I always ask the personal motivation why they're doing it, because it's not an easy thing to do. If financial gains is on the very top of that list, it's probably not something that I could be that interested in, primarily because you could easily give up on that once you start hitting a lot of walls. So, in the risk of sounding cliche, I'm looking for guys that really just run through a brick wall to get shit done. And more importantly, it's just somebody will just keep on trying to do it. So it's very similar to what these two gents already said.
There are a lot easier ways to make money than starting a startup.
Go to work for somebody else. What are, in your view, the metrics that you look at when you're looking, Paige, and everybody here is seed investors, but they go all the way up the gamut. When you look at various stages for you guys, the type of metrics these guys look at when there's seed investment, Series A, B, beyond that, what they can get there. What do you guys think? And you can start, Paige, on that one. Go for it.
Metrics. I have to admit I don't look at metrics at the stage that I invested. We look at metrics later after I've invested, but the early days, I don't look at metrics. I look to see if they've built something and talk to customers, but metrics, it doesn't exist at the stage I invest in usually.
Yeah, for us, for the pre-seed stage stuff that we do, it's kind of the same as Paige was saying. Often there aren't customers or users or revenue metrics to look at. And we look at a lot of the same stuff. What have they actually done, either on this project? Have they built a product? Have they talked to customers, users, run experiments around customer acquisition, et cetera? So those aren't metrics on the actual business, but they're gathering data, right? And there are ways to gather data about the viability of the business or the market or whatever without actually launching the product.
So they're very resourceful. They can dig. Is that?
Yeah, they're resourceful. They're digging and finding ways to make decisions with data. That doesn't mean they built the whole product and launched it to the market, right? Because if they had done that and it was the wrong product, then they're kind of screwed, or oftentimes. So I think it's being resourceful about validating the opportunity, like Paige was saying. And then, when we're making kind of later seed or Series A type investments, we do look at metrics. Again, at the seed stage, the metrics are often still really early. So we're not just looking at, how big is the revenue number or how much is this scaling, but we're looking for the way that we think about it is more in terms of we're looking for signals about product market fit. So that's different for every type of business, or at least for the businesses we invest in. For SaaS, that's different than a consumer product. So it depends on the type of business, but either user engagement or the rate at which they're acquiring users, or the rate at which users kind of acquire other users, if you want to look at, you know, quote unquote viral coefficients or things like that. For SaaS, I think it's you know, early indications around customers and their willingness to pay for it, things like that. But we're not, you know, again, at the seed stage, like Paige said, there aren't a lot of data, so we're not. It doesn't have to be sort of vertical, crazy growth.
But also, you guys give them some advice, because seed, let's say, is, you know, a lot of everybody's specialty here. But you guys know what it takes. You know, I know for a fact Paige is counseling people when they're at the A and B stage, and all of you are doing the same. So also add that, because the next question I'm trying to convey is, like, people get to a B or a late A, and the companies are falling apart because they can't get the metrics to get the rounds done.
At that stage, the three things that are most important to me generally come, and every business model is different, but it's usually around engagement. Even that tiny little community of 100, a couple hundred people that you have, are they coming back on a daily, weekly basis, depending on the type of product, and maybe more depending on what that is. But engagement, and then NPS. It's really important to understand if your customers love you, if they're rabid about you. And even in the early stage, you can do an NPS with email, with phone calls. I mean, you can call it the 50 people that use your SaaS product, or the couple hundred people using your app. So the NPS, the engagement, and then the fundamental issue is, what is it costing you to acquire a user, and what are they worth? I know you're not going to have perfect vision into that, but start to get to the point where you can tell me, how much is someone worth to you, and how much does it cost to acquire them? And if you're improving those numbers over time.
Then I'll go to Erik.
Yeah, so the three, I call them elements that we try to imagine. So it's all about storytelling at the stage we're investing in. We do have two hats. So we don't do pre-product, we do pre-revenue quite a bit. So if you can help me imagine three elements, that there's a quick path to revenue, that would be very helpful. There's a very predictable way to calculate your long-term lifetime value at some point in time. Again, it's all about storytelling at that point. And you know, prove that from a market sizing perspective that you are servicing a replenishable need. Then, you know, that would probably progress to a second conversation.
So let's put Dana on the spot. I hit the same traffic you did, so I get it. So we're talking about what are the metrics you need at different stages, and I know you have gone through all these stages many times, and kind of leading into, like, when people kind of get crushed at the Series B, they don't really have the ability, they don't understand that it was easier in maybe the seed and A, easier, let's say, seed and A, and now they have to have some performance. I mean, what do you think has to happen at that stage?
Series B?
Series B, and maybe the metrics of some of the other stages.
So, you know, I think it depends obviously on the kind of business. So if it's you know, SaaS business versus a e-commerce business versus, you know, some other kind of B2C business. You know, with SaaS metrics, we're really looking for growth and you know, sort of accelerating growth, because, you know, I think that just tells you so much about how fast customers are adopting it, and then you have the nice multiplier effect of SaaS revenue being recurring and not having to go out and, you know, reacquire customers and revenue every month. And so, you know, I think that's less about, is it, you know, sort of a specific amount versus kind of the growth and acceleration. But, you know, I'd say at a sort of Series B stage, I mean, again, to be honest, I hate using like Series A, Series B, Series C, because it just seems, I mean,
use what you want.
It's, yeah. But, you know, would certainly be looking for it to be in the, you know, kind of high hundreds of thousands, if not, you know, 1 million of MRR in a SaaS business. And you know,
maybe ask you, do you bet on you're still betting on the come, but they have to have actual results,
They have to have results, for sure.
Yeah.
And, you know, again, I'm sort of talking about probably a real Series B, you know, not a, you know, sort of accelerated Series B.
What's an accelerator?
Well, I'm just saying, you know, I mean, companies, right now, I think in particular, everybody's raising money because I think that there's a fear that the markets are going to close, and so everybody's running around and raising as much money as they can, and so they raised a Series A 3 months ago, and now they're raising a Series B because they think they should.
Like an A plus or A minus.
Yeah, so not necessarily based on traction. And then, you know, in terms of e-commerce companies, you know, really looking for a couple of things. The primary being actual, you know, aggregate volume. And so, you know, for e-commerce companies, we want to see, it's probably going to be much further along in terms of like the gross transaction value, in the, call it, tens of millions, because, e-commerce in general, you just need to get to much bigger scale because the margins are lower. And, again, it's transaction businesses versus, a nice sort of recurring revenue business. So you really, in order to scale and continue to scale, need to be at a higher volume. And the thing in e-commerce businesses that we really look for, particularly sort of through the Series A and initial traction, is not having spent money on customer acquisition. And that's a little bit, I think a lot of people find that to be, a hard concept to grasp. But the reality is if you have, a really great product and a great offering and really know how to connect with your consumer at early stages in particular, I mean, we think it's a real negative sign if you've spent money on customer acquisition. We want you at the Series B stage to probably have started to test it so that you know ultimately what your sort of costs are going to be as you start to really scale.
That's great. That's good answers. So let me take you to a structured. So this is kind of along the seed area. Would you recommend to the entrepreneurs you guys counsel every week and every day that they do a convertible, or is that the right structure? What does that do for the entrepreneurial team, and how do the investors look at that? And I'll start with you, Erik Rannala.
Yeah, in general, I mean, I think most investors probably would have a preference for equity, or at least kind of fund investors, and we do, but sometimes that doesn't make sense if it's a very small angel round or even a very small seed round where, if a company's raising $500,000, but it's going to cost them, $25K or more to do an equity round just from legal fees, it doesn't really make sense. But I think our preference in general is to have equity. I think a bunch of people have written about this, why convertible notes actually aren't great for investors and for entrepreneurs. Equity kind of aligns entrepreneurs and investors more in the sense that the relationship is more clear. It's just there are shares and the terms are laid out and they're not going to change later for either the entrepreneur or for the fund, for the investor.
How about Erik?
Yes, I prefer just a plain vanilla priced round. The cap versus price, ultimately it's the same thing anyway, so just have that conversation, get it done with. Yes, it could be more expensive, but it's not terribly that much more expensive to do a price round, even if you're only doing sub $1 million. So I prefer a price round.
More expensive from equity at the time, right? Is that what the thought is?
No, I'm sorry, from a legal perspective.
From the legal
just
process.
a documentation perspective.
What do you think, Paige?
If it's like just 50, 100, couple hundred K, just do a note, and then after that, just tell founders, you find your lead, do what they want. I mean, it doesn't matter. They want to do a priced round, then do a price round. Why fucking fight it? It doesn't really matter. Just get the money.
And Dana, what do you think?
What Paige said.
Okay. Ditto Paige. Okay, that's good. All right, so let's talk about, they all of them have invested in around the world really, but particularly the Bay Area and here. I mean, to the ecosystem, what's good about LA? How has it evolved? I mean, these are normal questions you get all the time. And I'll start compared to the Bay Area, and also I would specify like more towards management, teams, team building and things like that. So I'm going to go down and start with Dana.
So I've actually spent half my career in the Bay Area and half here. So now, granted, I've been here the last 8 years, so it's a little, my information is somewhat dated. But I still, spend time in both places and in New York and all over the country and the world. But, I think one of the great things that's happening in LA right now and has been, really over the past 7-8 years is that there is really an ecosystem that has developed and where people are really committed to it and I think for the long term. And now we have a lot of companies that have been successful and have had exits or have gone public and all of those people are sort of reinvesting in the ecosystem. And I mean, I've been blown away by how much that has happened since I've been here. And I think the really nice thing, and this is what I counsel a lot of my companies, is you really have, because of that sense of sort of, almost pride and ownership and, wanting to see the community succeed, a lot of loyalty or more loyalty in companies in terms of employees. And, when you hire a great team, they're probably going to stay. They're not going to just jump to the next hot thing. And so a real commitment to, making things work. And one of the challenges that I think anybody in the Bay Area in particular talks about is just, how quickly people jump. And that's, on the one hand, it may be easier to hire engineers because there's more. There've been, there's just a greater volume of big tech companies. But in terms of really being able to build a business and being able to sort of count on the teams, I think that's a real asset that we have.
You think the team chances are a lot better now here than they were before in terms of like product marketing, business development?
Yeah, I think so. I think it's getting better all the time, and I think as we have successful companies and companies that scale, you then have executive talent that has done that and has seen the patterns and can therefore sort of jump into companies at earlier stages and really help scale. So, I think that engineering and executive talent has been a challenge here, and I think it's definitely been improving in the last 7 years.
I'll go to Erik. Yeah.
Yeah. So loyalty is definitely a big thing down here. From a cultural perspective, companies down here tend to get to revenue stage much faster than guys up north. We do have. So I'll use LA as compared to Southeast Asia. We do have a fund in Southeast Asia, and about a third of our fund here in the U.S. is also geared for Southeast Asia. Southeast Asia is a little bit like the Bay Area today because there's not a lot of talent from a tech startup perspective. So the competition for management, competition for engineers, competition for executive talent in general is a lot more intense, and it's probably not as available as the U.S. LA, the 12 years or so that I've been investing in this marketplace, gone quite a bit. I never believed that there was a lack of talent here. I do believe that what Dana said, that loyalty factor is much nicer to have down here than the guys from either New York or Bay Area.
Yeah, so I moved here a couple of years ago from the Bay Area and spent most of my career up there. And I've been really impressed over even just the past like 2.5-ish years how well LA is kind of evolving, or how quickly LA is evolving as an ecosystem. Just in terms of level of sophistication of people and entrepreneurs and companies here and the talent here. I think LA, is one of the markets. You see this happening everywhere. Bill Gross was saying this earlier, that you can build companies anywhere. And I think to some extent that's true, but I think there are going to be places outside Silicon Valley that end up more sustainably building large ecosystems. And I think New York and LA are two of those places, partially just because they're big. They're big economies. They have big technical labor forces. They have, LA, in the case of LA, 3 out of the top technical universities in the country. So you've got all these kind of raw materials and now more capital flowing in. I think there's still, net a shortage of capital here relative to company formation and the amount of talent and opportunity there is, but more capital flowing in. And so all the kind of raw materials are there. And I think the first time around, the first internet boom, when Idea Lab, as Bill was talking about, got started and other places, after that, there wasn't enough here to sustain it, and it kind of died off and then started gradually building back up again. And I think this time it's a little bit different in the sense that
Okay, Paige, finish, please. Sorry.
New thing I like, drones. So I've been looking at drone marketplace, and we have a shitload of airspace here, so I'll say drones.
First, I really want to thank this team and you guys for listening. This is a really, really good panel of people. I mean, they've seen it all in the capital formation area and entrepreneurship, and so if you can grab them, I would strongly recommend you do that. Thanks a lot.
Hey, Bill.